Welcome to Preserving Your Wealth with Mike McCormick, where we talk about smart ways to invest and preserve your money. Mike is a registered investment advisor with McCormick Financial Advisors in Bozeman, Montana. As an independent fiduciary, Mike does not receive commissions from any of the products or investments mentioned on this program. Consult a professional before making any investment decision. You can find old shows archived at McCormickFinancialadvisors.com. Learn, participate, interact.
Mike McCormick is in the house. Good morning, Mike.
Hey, good morning, Tom.
Good morning, Mikey.
Hey, Shane.
Shane's here, too.
Yeah, we are all here. Gosh, time just has a way of going. It's already Thursday.
It does, yeah.
I had plans of getting a bunch of work done this week, but here we are.
Well, we're glad you're here and not working.
Oh, I couldn't be happier to be here.
Well, good.
Couldn't be happier.
Well,
there's a headline that grabbed my eyes right as soon as I walked in here this morning. TD Ameritrade is selling to Schwab, or more likely, Schwab is buying TD Ameritrade, and this is of news in my industry primarily.
Yeah,
and it's a big deal. $26 billion. That's with a B, and consolidating a lot of the do-it-yourselfers. But really, it's much more about people in my industry, the registered investment advisors. TD Ameritrade is mostly completely dedicated to people that are fiduciaries like myself.
Yeah.
And they provide the banking, brokerage, holding, tax reporting, clearing services that we require to do our job. So consolidating the two is, well, what is it? I like competition. I like having the opportunity that I could leave Schwab and say, TD Ameritrade's a better place for my clients to be.
Yeah.
So there you go. Well, I can't do that anymore. I just stay still, and we're all one happy family now.
All right. Well, good.
Well, the big thing is TD Trades. It was developed and built by Toronto Dominion Bank of Canada. So I see this as somewhat of a market signal that TD Bank is wanting to get out of the market in the U.S. with regards to direct trading, and that's a big win for TD Bank to sell that. Schwab, did Schwab have a platform, do you know, for people to trade online on their own?
Oh, yeah.
Yeah.
Yeah, Schwab's actively been happy to deal with my clients directly or support me. It's sort of one of those dual mandates that you scratch your head about.
There's several. There's 4 or 5 different ones you can do online besides Schwab.
There's a ton. There's a ton. And in fact, there's a Schwab retail office that's being opened here as well in town, out in Newtown, as I say, by a couple nice advisors. So the business is curious because Schwab cut fees to zero for trading. They weren't the first ones to do it, but they were the first big bank to do it, where you could trade a stock and not pay any fees. Now there's asterisks as some mutual funds still pay a fee. Exchange traded funds you won't. And so 2 questions, right? One is how do they make money?
Yeah.
How do they make money then?
Aren't they all advertising no commission now, no commission trades
that's what I'm saying.
now?
So it's no commission.
How are they making money?
Free service,
That's
free
right.
service.
Volume. That's how we do it.
And the reason that they do that is it's an advertising campaign, and they're not going to change that. They're not going to all of a sudden start charging people commissions, but they can charge fees. They could charge minimum account fees. There's always an account closure fee for an IRA, which doesn't make them any money. It smacks you on the butt on the way out the door. But mainly the way that they make fees is by giving you no money on your cash, because everybody that has an account where they own stocks usually has a portion in cash, whether it's dividends or interest that have been refunded to them, or just they didn't have enough to buy a round number of shares. So there's a portion in cash. Well, if you take all of the accounts that a big company like Schwab has and pool all their cash together, they've got a lot of money there. And they go and they do things with it that makes them more than 0%. And that's fundamentally how they drive earnings. But it's not a great living. So it'll be interesting to see that as this consolidation happens, will they find other avenues for making money? And another one is that they introduce their own products, their own investment products. I always try and tell people, when you're thinking about my business, think about I'm your expert shopper in the global supermarket of financial products. So you walk into the supermarket, you pass them your money, and they give you your goods and services. That is the banking relationship. That's the core of what these Schwab, TD Ameritrade, do.
Yeah, you pick the soap, you pick the olive oil,
and if you want to get your money
or,
back, you return your goods, and they give you your money back.
Mm-hmm.
They communicate with the IRS about what your taxable implications are. They tie your Social Security number. They follow your beneficiaries should you die, and they're in charge of administrating all that stuff, doing the legal work behind it all. Well, the stuff on the shelves of the supermarket are the financial products, and that used to just be stocks and bonds until people started putting these gift baskets together.
Mm-hmm.
And so those gift basket companies could be like a BlackRock iShares, could be like a Spider, could be like one of the mutual fund companies, CGM Focus. Think about all these famous funds that you've heard over the time, Magellan Fund, etc. Now, of course, these supermarkets can't go for long without coming out with their own products. You can't walk in a supermarket and not see their brand label of pasta or cereal right next to the Life cereal. They have the Kirkland or the whatever brand. So they have to get their toe in the water. Hey, we could make more money if we offer this. It's not insidious. It's not disingenuous, but it is sort of, people trying to dip their hands in both cookie jars. And then, they're happy to have a call center, hire some millennials that have these planning degrees and want to talk to you about allocating into mid-cap away from your international and that sort of stuff. So they're looking for multiple revenue sources. They like to have the money. That's the first stop that they're doing, is that if we have the money, then we can figure out how to make money beyond it. And, consolidation happens. Companies that are more like a Robin Hood, where they're giving everything away, are at a big disadvantage now, I think. So we'll see how it evolves.
Are they just trying to buy the business to...
Oh, no, I have a different flip on it. And by 2008, 62% of the American public were invested in the stock market. It was historical with the crash of 2008. And until 3 years ago, it collapsed to 58%. And the big win for Schwab was 95 to 2000 with the dot-com sensation of companies of worthless value, but valued at $1 billion, which resulted in day traders. And the day traders came in, and by the dot-com collapse in 98, 99, they were representing 40% of the trading every day. Mm-hmm. So I see Schwab making a move to try and bring those day traders back with no fee charges, because the most important aspect of the no fee charges, the cost you have in buying a stock is zero. So it reduces your risk going in to buy it, and then the profit you make when you sell it.
But how they make their money if they're no commission, free trades?
No, I'm talking about the trader. I'm talking about the reason they did this is to get the day trader back in the game.
Well, that's what I was saying. You're buying the business by giving it away. Or not charging a fee.
I'm talking about their customers.
Right.
You're attracting the customers by not charging them anything.
That's right. And
you're buying the business.
I explained to you the value to the customer is they have no cost going in or out, because if you're paying a commission going in and going out, you have to add to your overall cost of what you bought that stock for.
Right.
So you can do a day trade on currencies, which is the biggest market in the world, derivatives, as Mike said, or stocks. And if it goes up or goes down like 4 or 5%, 10%, which does happen on a lot of stuff, there's no cost to you, so you make that full 10% profit.
And for Schwab, to your point, Tom, those day traders frequently will be in cash overnight.
Yeah,
or at least a significant portion. Mm-hmm. So there's plenty of opportunity for them to make money off of them as well. Mm-hmm. Is this in the consumer's best interest? It's highly regulated. I think it's fine. I think for most everybody not being a day trader out there, does this change their financial world? These 0% commissions? No. But as a fiduciary for my clients, I do have a choice on where we custody their assets, and so why wouldn't I pick a place that charges zero?
Yeah,
sure.
And as an example, right now the value of the Canadian dollar on the currency market today is $1.33. So if I go in, because I check this one every time I go to my bank, if I go in and I want to sell American to my bank, and get Canadian money, they give me 1.28. If I want to take Canadian dollars and buy American, they charge me 1.38.
That's quite a spread.
So that's a 10% spread. Wow,
yeah. You're doing well up there. No wonder.
The banks are.
Yes, well. They are. They are, and also, Shane, I'm wondering, the Canadian dollar has not been great since the oil problem of 2 years ago, really, 2 or 3. So is this deal, did Schwab pull the trigger while the currency imbalance is in their favor? They're using U.S. dollars to buy a Canadian asset right now. That's on sale, right?
Yeah, and the reason they're locking it in is because they know that once this, USMCA deal is signed, being a commodity-based economy, our dollar should strengthen, even though the price of oil and gas is still down.
So there's a timing aspect to it also.
Yeah, it's a timing aspect to it. But hey, 2 things really quick, Mike, I want you to talk about, if you don't mind, before we go to break. We talked briefly about Aramco, so we got to talk about that because it's exciting. And the other thing is Disney Plus, baby, up to 20 million plus subscribers. I'm telling you, 100 million subscribers by Christmas, Mikey.
Get on board,
this stock. This stock you got to watch. I mean, I'm so excited about this because this is a stock we got to watch over the next year because they're going to have. It
hasn't moved too much. It hasn't jumped.
No, but I'm saying it's at 147. I'm not suggesting anyone buy it. I'm watching it.
Yeah.
It closed at 148, which is a high yesterday. But the fact is, they get to 200 million in less than a year, which they will worldwide. They're ahead of Netflix because Netflix is at 136 million worldwide. So this is going to be great. This is going to be great to watch.
Are you saying Disney's already ahead of Netflix, or they're projected to be?
No.
Projected.
They're at 20 million. I say they'll be at 100 million by Christmas, and I believe by June next year they'll be at 200 million and surpass Netflix.
Wow. Yeah. I don't deny it. I think that I'm fickle as can be. I mean, how many times can you be excited to watch a movie and you can't find it on Netflix?
That's right.
That's true.
There's only so many times you can do that. And then the cord cutters, where do we go from here? I mean, I want to cut my cord, but I know I need cable internet. And so I can go and I can bring my cable box to the shop here and I can say, no more TV, no more landline. And they'll say, okay, we'll give you your cable. Here you save $20.
Yeah.
That's how they're going to do it for me.
Yeah.
I'm not so excited.
Until Wi-Fi, Mike. When Wi-Fi comes, they're all in trouble.
Yeah. Now, you can watch local channels on your computer, obviously.
And you can watch it with Bunny Ears. Bunny Ears gets really good coverage here.
Yeah.
Bunny Ears, I love you, Mike. That's great.
Yeah, there you are. Yeah.
I'm not that young.
From our text line, 478-8298, Mike, if Trump is impeached and removed, will President Pence bring stability or chaos to the markets?
Woo, what do you
think?
That's a hot pitch coming on in. I think that it's not going to happen.
Yeah.
So don't get too upset about it. But I would think that if Pence came in, he would go by the exact same playbook that Trump did, but be a lot quieter, and that might win him a seat in the next election. I mean, he's not going to change anything to do with economic policy.
Yeah.
He's not going to be he'll never fill Trump's shoes in any sort of personality way, right? He's the milquetoast to the lion. So he would just do what he's doing, which is, what's he doing? I don't know. I don't know what he's doing.
Well, nobody knows what a vice
Senate.
Yeah, right. nobody knows what a vice president does.
No,
he just kind of.
I know what the vice principal does at the high school, but I don't know what the vice president.
Well, the vice president goes to funerals. That's about it.
I would guess that his plan would be exactly the same, and don't change a thing.
I was going to say, don't change anything.
Right.
We'll just keep right up.
And no, I don't think economic collapse. I think economic. No. The economic concern is going to happen.
I don't think the market cares who's in office.
Well,
they care about what the climate is and what the consumer is doing.
And I feel like this happens every election cycle. There is a period leading up to the election, where there's a big concern that some candidate got traction for a radical idea that might become reality, and the market reacts to it. Emotional investors react to it. And so the obvious one is that Senator Warren might win and might take all of our money.
Right.
And so there'll be a period of time before the election
that you'll bail out of the market.
People that are emotionally bought into that will make decisions. Now, if she or any of the other side wins, they're not going to take all our money. They're going to want to keep this economic thing going too. They might say some things to get them elected, but that won't be the first president that would have done that. So I'm not really that concerned about fundamental change in the economic landscape right now.
All right. We got to take a quick break. When we come back, we'll see if Mike McCormick and Steve Conover want to debate debt or not.
Oh, Shazam.
We'll be
and
right.
Saudi Aramco, too. That's a good one.
We'll be right back with more with Mike McCormick, Shane, and myself right after this. Hang on. 22 minutes after the hour of 7 a.m. It's Thursday, November 21st, 2019, 23 degrees outside. Shane Taubman, half man, half amazing in Vancouver, British Columbia. Tom Eagle, your morning mayor, and the inimitable everybody wants to be like Mike is in the house. Mike McCormick is here. So
I am here.
Hi, Mike. Is there any legal precedent that requires certain classes of money managers to function as fiduciaries, or is it more a matter of personal ethics based on the moral code of the particular financial advisor?
Well-phrased question. Fiduciary means that I am personally liable for the advice I give my clients, which is scary, right? You know, if I'm saying, hey, I think you should do this. It doesn't work out.
Mike doesn't do well unless you do well, right?
Mike I'm not on the hook. I don't make people whole if something goes wrong.
Yeah.
So first of all the advisors in this town do a great job, and they are doing their best to do what's in your best interest. And so I think that if you find somebody that you trust and you enjoy working with, you can ask them the hard question, you know, are you a fiduciary, and see how they answer. But, you know, fundamentally, if you feel good, then they're probably doing their job. There's a lot of regulations that go on in our business to make sure that people aren't swindling other people.
Yeah.
So the old school model is, hey, I've got this investment to sell you, Tom. It's a really good one. You can't beat it. And I make a commission. And that's every movie that's come out from Wolf of Wall Street to Boiler Room to those other ones, right?
Yeah.
And there still are products out there that are being sold that way, primarily insurance products, annuities, life insurance, and the whatnot. The reason why those things work well for commissions is that they usually don't require ongoing management. You buy it, and you just hold it like a CD or something, right?
Yeah.
You don't need to
pay the premiums,
right?
And it
Like
just keeps on going. Yeah.
Right. And think about buying a house. I mean, those commissions are, I can't believe actually that a 6% real estate commission is still the standard.
I know, yeah.
You know,
when you're talking about $300,000 and $400,000 houses,
well,
wow.
You know, hats off to the realtor lobbyists on that one.
Yeah.
Of course, it's whatever you negotiate in that world.
Yeah.
So in terms of me being a fiduciary, I'm classified as a registered investment advisor, is my company, and we're regulated by default. That's the only way we can operate. We're not allowed to take commissions. And because we're not allowed to take commissions, it makes my life a lot easier. Now, a lot of the companies in town that do great work have a dual hat. They can do commission products, and they can do products where there's no commission. And so they're sort of a cross registration. And in some situations, they're acting as a fiduciary. If you sign this contract, and if you sign this contract, they're not. And this contract's really long, and you signed it, and nobody reads it. So it's a confusing mess right now. And the companies, they're doing their best to stay in front of it. There was a mandate that we were going to all have to be fiduciaries. That got rolled back. So don't get hung up on it, is my point. If you like who you're working with, you can ask him or her some direct questions. And we do need a lot more females in my business. So if you know somebody that's considering it, that's a female, urge them to continue on. There should be great opportunity for them. So I don't know if I answered the right question or not, but don't get too hung up on titles. It's like, you know, your realtor has a bunch of letters after their name, right? Does that mean that you can sell my house? Let's talk. Are you the right person for me? Etc.
Yeah. Are you? Well, the big thing I think the texter is asking was about the fiduciary rule. It was rolled back. It was supposed to be April of last year or 2 years ago. I forget how long it was. Yeah, it was 2 years ago at least. And where everybody was supposed to act in the best interests of their client by law.
By law.
And
now it's not always like that.
Now it's not always by law. So that's why I say you, and your advice is well taken, that, if you're not sure who to talk to, then ask somebody who's got some money. Everybody knows somebody that's rich, or
ask your accountant.
Ask an accountant or a CPA or somebody, or say, hey, who does who do you think's an honest person to handle my money?
Right.
And that's that's probably the best way to do it. So,
Saudi Aramco, can we touch on that real quick?
Sure, let's do that. Yeah.
Shane wanted to bring this up. Now, Saudi Arabia, let's say you're king of Saudi Arabia.
Giant
You're sitting
giant
on
deal.
sitting on $1.7 to $2 trillion worth of oil in the ground. And you're saying, I heard Mike on the radio. He says that I should be careful about my concentrated risk in my one position. Maybe I should diversify.
Yeah, why not?
Right. Price of oil moves by a penny. Your net worth moves by more than the state of Montana's worth.
Right. Yeah.
So, there's a real issue there. So going public was their strategy. And this has been in the works for years and years. And it's finally coming. Well, we think it's finally coming when their IPO would happen. And the idea is that people can.
Initial public offering.
Correct. So they're going to commoditize their own asset and allow other people to invest in it, and then in return they'll get cash, right, for selling shares. It's no different than if I have this company that's worth $2 trillion, and I say, I would like to cash out, but not completely. I'd like to keep some control. I want to keep shares. I need some liquidity to do some other things, which might be oil related, but in this situation probably not. So they say, okay, we're going to do an IPO, initial public offering. We're going to come up with a valuation for what we are worth. And hopefully everybody buys in and it goes well, just like anybody that does an IPO does. And then with the proceeds, we can diversify, build more of a diversified company, the Saudi Aramco. It might get holdings that, think of a Warren Buffett empire type of thing. They can buy private companies. They can go invest in they could invest in Tesla stock if they wanted to. Now, big news out is that they just decided, we're not going to use a traditional bank for our IPO. We're just going to use our local boys. So they're cutting the Goldman Sachses of the world out of about $300 million worth of fees, depending on how you count it, after they had been, flying cases of Bordeaux over there for forever. I'm sure that there's a tremendous amount of marketing dollars that were spent in wooing these guys over there. And they're going to take it in-house. And the reason why makes sense, because the primary purchasers of this stock are going to be all the cousins that have been getting payouts from Saudi Aramco anyway. So they're going to keep it in-house at the first stage of this as much as they can. There will not be an opportunity, I don't think, for you to buy shares of Saudi Aramco on the open market for a period of time.
For a while, yeah.
To ensure a stable price on it. But Shane's going to have some more insight on that, I believe, after the break.
He will, absolutely. So stay tuned. Shane will comment on Aramco when we come back. So don't go anywhere. You'll want to hear his pearl-shaped tones right after this. 24 minutes for the top of the hour. Mike McCormick's in the house. Shane Matobin on the line, and we've got a caller patiently waiting. So let's go to the phones. 522-TALK is the number. Caller, you on the air with Mike McCormick. Tom and Shane, what's up?
Well, before you get into this, I was wondering about a underlying factor of attitude called fiduciary duty. Comes out of the same root word as faithful. They're trying to put laws in the book so that people have a more fiduciary responsibility to clients, that they put their clients' best interests first. But how could this even be an issue? Why wouldn't somebody be above board about trying to put your client first? It's like lawyers are kind of convinced themselves that it's all right to lie if they can win a case for a client. What could possibly be in the mind of a money advisor that he wouldn't have fiduciary duty to a client? Are we going to end up saying in the future, what were we thinking by not even having fiduciary duty as one of the 10 commandments?
Well, I think most people, I think most financial advisors do act as a fiduciary, because if you do well, if your client does well, then you do well. I mean, it's a no-brainer.
Yeah,
Mike? Yeah.
DRP. I think that it's your car salesman's not a fiduciary, right? And then we did scale it over to your realtor. Your realtor's not a fiduciary. Your CPA, your attorney, they are fiduciaries. The CPA, the attorney, they provide ongoing advice that needs to be clear not to have a conflict of interest. And so over time, us advisors have become more like CPAs and attorneys and less like used car salespeople. It wasn't always this way. It did used to be that we were peddling stocks. We were hitting the phones. And yes, that was not a bright time for us, and we have plenty of movies for it. Not everybody is a fiduciary. There's still muddle in the water, and the big wirehouse companies, they don't. If you think about it, the reason why I'm a sole member independent fiduciary is because I don't want to manage people that have liability out there that could take me down. So why would I have employees? So a big company, it's untenable for them to have 10,000 sales kids out there in suits and ties with fiduciary duties. They would get crumbled to the knees with one big class action lawsuit. So there's big questions at play on this one. Again, bottom line is that it's a good town to do business in. You see people in the grocery store. You see them on the soccer field. You can look them in the eye. Word gets around. Most everybody's doing a great job here.
And they can.
And as Michael's pointed out, it's one word: liability. This whole thing about putting them under a fiduciary rule or guideline under the SEC makes people like Mike liable. So he's got to be very careful that the people he deals with are understanding and knowledgeable and make their own decisions, and he advises them accordingly, because that's what it's about.
Yeah, eventually it's up to, Mike can advise them all day long, but it's up to, if I came in and, Facebook when it was $10 or whatever, Mike might say, I don't know if that's a good place to put $2 million, but, it would turn out okay, right. But Mike would probably be smart to advise me that we don't know where that stock's going to go or what's going to happen to it. Right. It's cheap, but if you've got some disposable income, you want to play with it, put it in, but don't put $2 million in it.
And sorry, I'll just also add that Montana is just a wonderful place to do business, because consumers can pick up the phone and they can call the securities and insurance office and talk to Lynn. They can talk to real people there that will listen and they will act. So regardless of the certification of the person you're working with, as consumers, I think you're pretty well represented in the state by real people that really do care. There's a lot of recourses. Thanks for the question.
Yeah, thanks,
Daniel. Yeah, well, yeah, like quid pro quo, this for that. The old Robins weren't as dumb as we thought, so it's buyer beware. There is that element.
For sure.
That's true.
Absolutely
right.
Take into account.
Yep.
Okay.
That's what you got to do. Hey, thanks for the call.
Pooling their money, right?
Amen. Yeah. All right, we got to take a quick break. We'll be back with Mike McCormick, Shane Montalban, and me right after these important words, so stay tuned. 16 minutes before the top of the hour. Mike McCormick's in the house. Shane Montalban's in the house. Tommy Goff's in the house. And Shane, you want to make a point, I think, on what we were talking about earlier?
Mike, if you'll allow me just 1 minute rant. So the context on Aramco, interestingly enough for everyone to know, it was originally, first it was established in 1933 by the California Arabian Standard Oil Company. Whoa, they found the oil. Now remember, the Germans went into Africa, the North Corps, to get to Saudi Arabia to this oil. And so when they hadn't succeeded in that and the Allies threw them out of Africa, the kingdom nationalized it in 1944 and changed it to the Arab American Oil Company, which in 1988 it was changed again to the Saudi Arabian Oil Company, or Aramco, a major company. I mean, the operating income $798 billion, and the interesting thing, their revenue was $355 billion, but their operating income was $798 billion. One thing that needs to be made clear about this is three things. Number one, the U.S. banks want them in the U.S. market. It locks them to the U.S. dollar. It doesn't allow them to get involved in anybody else in the world about selling their oil other than with U.S. dollars. Huge, gigantic. Number two, they're taking it public, but the kingdom is keeping 90% control and only selling, I believe, 10% to the public. Yep. And the other day, Bloomberg came out and said that while the Saudis are valuing it at $2 trillion, they see its value as $1.2 trillion. Wow, why is that? Well, the banks want to make sure if they do this underwriting and the stock comes out, it goes up in value.
Well, there you are.
They're not fiduciaries.
No, they're not.
They're not exactly. Good call, Mike.
No, the history of oil and international policy is fascinating.
Yeah, it really is.
Now, what the future of oil and international policy is?
It's the blood of the planet. I mean, come on. It just is.
Right.
Yeah.
Right. Hey, something that I wanted to share with everybody, and Shane, thanks for the great comment, is that for our own personal retirement planning, the data is coming in and showing that people are reluctant to spend their life's savings.
Yeah.
Surprise.
Yeah.
But it does have a very real impact. When you talk with people that are in retirement, they are, of course, more sensitive to news flow and market fluctuations and concerned about longevity and running out of money than people that are not currently in retirement. Duh.
True.
But the impact of that is in their behavior, that they are reluctant to draw out their retirement money and spend it. I think that this is based in the core of who we are and our concerns about mortality. Nobody really thinks they're going to die. And the greatest fear that most people that I work with have is becoming a burden on someone they love. This is a lot of my peers are going through taking care of their parents right now. And it's a difficult time. It is an emotional time. It's a ton of work. That being a caregiver for someone is sort of the unreported third job that people didn't expect to have. So when you're saving for retirement, we as an industry, we need to have a much better plan for saying, and the point of this money is that you will be spending it. This year is the first year you're supposed to be taking your money. This next year, instead, people are finding ways to avoid that and delay that. Now, the net impact is this is building a thesis in my mind for continued excessive gains in the stock market all the way through the baby boomer generation. If everybody's reluctant to pull their IRA money out, there's nothing other than marketable securities. This is in some ways a trick of the stock market on everybody. Is that you can't?
Well, you have to take a distribution of 70.5.
You have to take your 70.5 distribution, your RMDs, but that's 1/30th of your balance.
Yeah.
And so 1/30th of your balance. Well, if you've got some exposure to growth, you're still going to end up with more money in the market after doing that.
Sure. Well, you just take it out and put it somewhere else.
Well, right.
Some other produces income.
But yes, there's an interesting thesis being developed that this is a mandated self-promoting thing of stock market levity, and maybe we're talking about PE ratios today of being high. Maybe tomorrow's PE ratios are even higher because there's just so much money that doesn't have anywhere else to go because people are afraid to pull it out, pay taxes on it, sell it. It's a big theoretical one, but it's interesting when I keep continually coming across people in retirement that are finding ways not to tap into their resources that they save so well. What's the net impact of that? And this, of course, happened because it used to be that we had pensions. Now we're taking the risk. Now it's on us to make the math work. It used to be the pension was heck yeah, I am retiring the minute that my pension vests, and I am going to live as long as I can, and I'm going to spend all that money. Now it's not like that at all, right, Shane?
That's right. That's right. And it is quite remarkable because in a lot of cases too, and I say this to my sister, I probably shouldn't. She'd probably get upset for me to say this, but the thing about the baby boomers, and the millennials inheriting their parents' money, the first thing they do is they sell everything and then they start spending it.
Sometimes
that's not, and that's not good for the market.
Sometimes, yeah. I mean, my advice is when you get an inheritance, put it back where it came from. That inheritance was there because it was the family farm. It was the inherited stock positions. Go back into that because that was what worked for your family. That is your family's legacy. That is, it doesn't have to be the exact same thing, of course, but I mean, don't be the generation that dropped the ball, right?
Yeah.
Nobody wants to be that generation.
No.
Yeah, that's right.
Well, the other thing that comes up from time to time, and maybe we'll talk about this after the break, is millennials don't seem to be investing, and seniors are taking the money out. So why are we at 28,000? And
well, again, I argue that seniors are not taking the money out. Obviously, they're taking some out, but
Well, they're taking what they have to by law.
Think about it. Right now, I'm at the stage of my life where I am jamming as much as I can away because I've got college, I've got, my body's getting old. Time is not stopping for me.
Yeah, no, it's not.
And I was not little Johnny that put the nickel in the jar every day since I had my paper
Make your
route.
girls pay their own college. You're not obligated to pay their college.
So.
Don't use your retirement to finance your kids' college.
Well,
that's a first rule of money.
I didn't say I was going to. I didn't say I was going to do this. But I am a helicopter parent, and,
of course.
And my joy is directly impacted by the women in my life. Happy wife,
by them
happy
getting
life.
a liberal arts degree or
I got a niece.
Peruvian pottery.
I got a niece that's at my alma mater at Yale. She's not listening, so I can say this. And she's a journalism. She's a journalism major.
Scheme, right, Mike?
Come again, please.
Canadian hella scheme.
Yeah.
Oh, I've got a few trips on the books, but not soon enough.
All right, we got to take a short break here. We'll be back in 3 minutes more with Mike and Shane and myself right after this. Stay tuned. All right, welcome back, everyone. 5 minutes before the top of the hour, Thursday, November 21st, 2019. Winding down, Shane Matobin with me. Tom Eagle up, your morning mayor. Mike McCormick, McCormick Financial Advisors, is in the house. And, well, we've been talking a little bit about everything here in the markets. And,
we like to keep it on the soapbox, and we got the market opening pretty flat.
Yeah.
Chinese negotiations are stalled, and that's moving the market about as much as a Brexit delay, blah, 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 right?
Everything going on.
We just get fatigued on these stories so quickly.
Well, we went up over 28 there for a day or two, and, now we're not that far off of 28, but certainly we've added $10 trillion in new wealth since Election Day.
Magic. Well, times are good, and there is an idea about taking risk right now that might be rewarded. Now, just because we're hitting new highs doesn't mean we can go any higher.
Sure.
And I think that when you least expect it. So this, we're getting to the year end, and we're going to have year in review, and we're going to see wonderful numbers for this year, wonderful gains for everybody. Now, don't forget, last year, Christmas Eve, we had a huge pullback in the stock market.
Yeah, we went south.
And so if you started your measurement stick after that,
you've done well.
Things are going to look pretty good. So if you don't include, the numbers and statistics and the damn liars and all those sorts of things.
But we've almost doubled in the 3 years since the election.
It has been a great time to be an investor, for sure.
And I think your president's very aware of this. He's very savvy about the market.
For sure.
So he realizes he's got a trigger with the discussion about China because, my concern, I think fairly all of our concerns, is there could be a correction, like you're saying, Mike. And so he's sort of tampering down the market, from being over exuberant, as one Secretary of Treasury said back in the late 90s.
Irrational exuberance.
Exactly, irrational exuberance. And I think, too, that the other thing is that we don't talk enough about how to reach you, Mike. What's your phone number?
Yeah.
Oh, I appreciate that. 522-3201. You can find me on the interweb everywhere. And I want people to know, I'm not here to promote my business, and I have a small select group of clients that I work with. But anybody that listens to this show, I would love to hear from you, and I'll be happy to give you a conversation and point you to some of the good people in town. Most of the conversations I have for people are, you doing fine? Stick where you are, or maybe think about this or that. But this is a great community resource for everybody, and I'm here to promote financial literacy, not promote my own business. So hopefully I'm doing a good job of that.
That's what makes you the man,
There
Mikey.
we are. From our text line, 478-8298, how much money do you have to invest with Mike?
Oh, geez. Let's not answer that one.
That's a phone call question,
yeah,
right?
And, we all have our businesses, how we operate.
That's true.
So, I want to have a long-term relationship with somebody that I really benefit, means some complications and trusts and, that sort of stuff going on. But everybody has needs out there. Everybody has questions about money. It doesn't matter if you're wealthy. It doesn't matter if you're negative equity. Having a conversation with people about what are they doing, making good, deliberate decisions over time. And I always say your CPA is probably your best advisor out there. They're not as liability-centric as your attorney. Your attorney's going to, be very concerned about their business as everybody's suing each other, right? Your CPA is going to be one step more liberal from that. They get paid an hourly fee. They see lots of things. They see lots of different ways things work. And in this town, all the money's been made in real estate. All the money will probably continue to be made in real estate. I don't know where we're going from here on this real estate market. We went overnight from, Cowtown to now we have big national real estate investment trusts. They're building multifamily units. We've got student housing real estate investment trusts that are building. We've got the big boys playing right here in our backyard. Yeah. And they're running really sharp, thin lines on the pencils. Careful out there in all your investing activities. And thanks for participating on the show. This is the spot.
Yeah.
Soapbox.
This is it, man. Hey, thanks for being here, Mike. As always, we appreciate it very much. And thanks to all the listeners for the texts and questions and all of that. From our text line, 478-8298, if only we could get the government to quit spending so much. Wow. That would be nice,
If only I spent less money, I'd have more money.
And last night I listened to 10 people spend money like it was water.
I bet you did.
Like drunken sailors, as they used to say. All right, thanks so much, Mike. We appreciate you being here, Mike McCormick.
Everybody have a wonderful Thanksgiving, too. Are we here on Thanksgiving?
No, you're off.
I'm off.
I'm off.
All right.
Shane's off.
I'll be huffing with the stuff.
All right. All right, we'll be back with more. We got the 5 things you need to know on our text line